Greetings, this is the first video regarding process costing. Here we will delve into defining important terminology and definitions, as well as underlying important equations. These concepts can be found on Chapter 6 within pages 230 to 279. Process costing involves when costs are accumulated as one unit of a product is identical to the cost of another. These products are similar and their costs are accumulated by different processes or department. For example, when creating a tin of butter, there are different processes used to turn the milk and curd it into butter, and then package it before going to the store. Unlike job order costing, process costing is divided into different departments with their own work in process and transferred to another department with costs associated with transferring the product in and out of the process and process costing, instead of going through a more individualized approach such as in job order costing, where the processes are broken down by each individual job having their own account, such as purchases, overhead, etc. for each individual job. For example, when using a snow removal or plowing company, the work in process is identified for each individual plowing job and not from Department A to Department B to Department C. Also, process costing transfers all of the manufacturing costs into the final product. As my earlier example, the butter, all of the different manufacturing costs equal the final product, which is that big old tin of butter that you buy at the grocery mart or wherever. Next, I will discuss the two main types of processes and process costing. The two types of processes are sequential processing and parallel processing. Sequential processing goes from one step to another. So, in a three-step method where the 3 is the finished good, it goes from 1 to second to the third, where you have to go for one step, as in this checkpoint, to the next. For parallel processing, there's many different, it could be 1 or 2, ways to get to the final product, or the finished good. An example of sequential processing is considered to be making butter. You curd it, then you put it all together, and then put it in the package to be able to sell it at a grocery mart. Parallel processing could be making speakers for Bluetooth ones. Put all the parts together, and you in different parallel processes while assembling them to the finished goods. I will discuss the costs that are used for transferring one process to the next. Notably, regarding process costing, there are transferred in costs, which are costs associated with a previous process going into the next process, or from one department to the next. For example, when creating this wonderful jar of butter, there's going to be the curding process, where there's going to be transferring costs, the first one. Then, there's just the putting the butter together, which is going to be, has another set of transferred in costs. And then the final product, or the finished good, is the wonderful package of butter. Next, I will discuss how to prepare process costing. Process costing reports or production report consist of direct labor, overhead, direct materials, work in process. Notably, it's usually included into two sections: unit, information section, which lists the units to account for and the units accounted for, and the cost information section. It has the cost to account for and the cost accounting for. These help account for manufactured costs in each different subsequent account. Next, I will discuss the two different types of firms, service and manufacturing, that use production reports. Service are firms that process unit cost is equal to total cost for the period divided by number services provided. And also manufacturing, their unit cost is equal to total cost for the period divided by total output for the period. Notably, the main difference is the number of services provided for service businesses, while manufacturing firms have the total output for the period. Next, I will discuss the different types of work in process. First, there is ending work in process. And next, there is beginning work in process, or BWIP. Ending work in process inventory involves the incomplete units at the end of the period, which this can be found by dividing the total cost of the units divided by the number of units produced. On the other hand, there's beginning work in process, or beginning work in process inventory, which are the complete units at the beginning of a period. In order to account for both ending work in process and beginning work in process, there are two different types of ways to solve work in process problems or to account for these. There's the weighted average method and the FIFO method. Before we delve into these two methods, I will be discussing another concept called equivalent units of production. In general, ending work in process is not complete. After all, it's incomplete because it's only in process. In order to solve this problem, especially if only a certain amount of the units in the ending work in process are complete and not knowing whether to add a certain manufacturing cost or whether to ignore the units there or what to do with them, there's a concept that is called equivalent units of output. This rationalizes how much complete units could have been produced. Thus, one must determine the equivalent units of output when knowing a basic formula. Equivalent units is equal to units completed plus units in ending work in process times percent or fraction complete. By determining equivalent units of output, partially completed ending work in process inventory can be transferred out and also figured out. Next, I will discuss unit cost. As you recall from earlier, there are two separate definitions of unit cost for service and manufacturing firms. Service firms' unit cost equal total cost per period divided by number of services provided, and unit cost equals total cost for the period divided by the total output of the period. When you know the output and you know how much completed something is, the unit cost is going to be equal to the total cost divided by equivalent units, which accounts for beginning work in process and ending work in process inventory. Also, this determines the cost of units transferred out from one department to the next and accounts for how much is in the ending work in process inventory. Unit cost is very useful because when there's even no beginning work in process, you are able to find out the cost of the units and how much is transferred out plus how much is in the ending work in process inventory. Next, I will discuss the two different types of process costing called the weighted average and the FIFO costing methods. The weighted average method and the FIFO method. Via the weighted average method, the current and previous period costs in the beginning inventory are combined, thus resulting in a weighted average. The average unit cost is applied to both units. Those transferred out and the others resulted and pooled in the ending work in process inventory. In the FIFO method, however, the beginning inventory and the cost of equivalent units are separated. Therefore, when completing a process cost report for the FIFO method, there's another line in units to be accounted for called beginning work in process inventory. And for cost accounted for, there are the beginning work in process inventories as well as was originally used in the weighted average method, which includes completed and transferred and ending work in process inventory. This concludes our first Chapter 6 video, and the next video will be the final Chapter 6 video on process costing, which uses the concepts that we have learned here to complete textbook problems. Resources can be used at ACE and both the Bedford and Lowell Math Centers, as well as e-tutoring. Thank you for watching and please stay tuned.